What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our broad market, so SPY, the Qs, and IWM. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, on the SPY, we certainly have a bit of a look above and fail. We know that the target technically should be the bottom end of the range, but the way that we're going to approach this is a little bit different, right? We're not just immediately going to assume it's short here at 437 because on a bar-by-bar perspective, we still have higher lows being produced and higher highs as well. Okay, so because of that, it's not just an immediate short, but if we were to take out today's low of day, then that would obviously give us a new lower low on a bar-by-bar perspective at least, and then maybe the bottom of the range here at 429 comes into sight. All right, so that's how you're going to be thinking about the downside here if it truly is going to be a look above and fail. If we get some acceptance back above this 437, it's still all about this area right here, roughly 444, 445, daily 200 SMA, and the primary resistance trend line. That's what we have to the upside. That's what we've got to the downside. Let's take a closer look at our 30-minute time frame chart now just for a little bit more information, get a little bit more granular here. What I don't like about the 30-minute is the fact that from here to here, we obviously have a lower high and we're currently sitting on equal lows. So because of that, I would imagine that any subsequent lower high that forms, anything that cannot take out this level here around 439, we are probably coming back down for an equal low, and now this is a flush point. And again, that's the trade essentially that brings you to the bottom end of the daily range at 429. So yes, start to look at that as a descending triangle. If we put in another lower high, it's a rollover for the move lower. That is your look above and fail on the daily. So that's how I'm thinking about that here on our 30-minute time frame chart. To the upside, if it is going to reverse, then start looking at this as potentially a double bottom, but you would know that the neckline has to break to get involved to the long side. So if we can take that out, again, that's your 439, that's where you get the rotation into the resistance trend line and potentially that 444 area on our daily time frame. That's the upside target that we were literally just mentioning. So that's how I see this unfolding into tomorrow's session. Those are the major levels that I'll be paying attention to. 439 for upside breaks and flush points underneath 434 to get us to the bottom of the daily range. Now, if something crazy happens, Friday madness, we'll call it, and we really get going one way or another, 429 breaks, obviously that's a change in trend, and we would have a lower high from here to here, double top to here, correct? We would then be looking for the equal low if we cannot preserve this set of higher lows. We were talking about this on the main channel just yesterday, so we would make the, I guess you would call it an assumption that maybe we move lower towards that 417 point of control from the Thursday madness day 2 weeks ago, or a week ago now, when we flew like a bat out of hell off the lows, right, on the gap down. So that's what I see here. That's what I see unfolding if it's going to be a madness Friday. If we take out 429, I don't see that as a likely possibility, but obviously just giving you the levels that I'm watching, that's what I've got. To the upside, again, if it's a madness Friday and it really gets going, 452 is the next structural element coming from right here before we get to the double top, of course, at 457.50. So that's the up and downside here in the S&P 500 based on everything we've discussed so far. I want to just reiterate one last time that this is primarily the focus into the open, right? Do we produce a lower high and then equal low? That sets up the breakdown, or do we break the double bottom neckline here for the move higher? That's all you got to watch for in your S&P 500. Let's continue along and talk about the QQQ for our NASDAQ 100 and the tech sector. Zooming in on this one, a much cleaner look above and fail. I mean, you can clearly see that we had very little acceptance above. If I just zoom in on the 30-minute, it was basically one bar where we spent above, all falling towards the breakout point, right? And then we got all acceptance underneath, clear lower high, not even close to a double bottom setup like our S&P 500, and we're sitting right on this shelf of support, certainly above our balanced lows, but nonetheless, if you wanted to split the difference, I wouldn't call you crazy for saying that this is, the balanced lows as well, right? On the daily, you can see how that would also start to make some sense here around that 340. So stuck in the range, certainly some hammer candles printing in the last hour of the day on the last two 30-minute bars. So do we get a move back to the top end of the range is the question. If we do, then obviously your trade is above the highs of those hammers. Stop underneath, looking for the rotation all the way to the top end. Has to be all the way there. Otherwise, your risk reward doesn't really make sense, right? So that's the long trade here. After that, sure, monitor for continuation. You've got to pay attention to 350, where today's high of day was. So that's your first target if we break out of the range. After that, 353, right? We've discussed the importance of that level in the past as well. All of the interactions here, as well as here, aggressive selling. So that's your upside level if we get continuation. To the downside, just like in our S&P 500, if we get something that resists for a lower high from here to here, we have nothing more than short-term downtrend continuation flush of the 340 gets fairly nasty. Sure, we've got a little bit of a low here around that 337.50. We've been using that as the low of balance, but as you can see on the 30-minute, this 340 is much more important. So maybe there's a bump in the road here, but look left. I mean, the structure on the way up, extremely poor. So we're really looking at a rotation all the way back down towards that 329. So tech could get fairly nasty if this flag pattern starts to fail and we break the 340. Again, we were leaning long, noting that we were pressing up into the resistance trend line, the daily balance highs. It just didn't materialize on today's session, and we did rotate to the bottom end of the range. So the look above and fail has materialized. Now it's a patience play for the next setup. I described the long up and over the hammer highs for the top of the range. That's just your classic ping pong trade, or the flush underneath 340. I'd be a little bit skeptical of a massive break into the end of the week unless we open on some sort of crazy gap up and something, incredible happens in the post market tonight or early tomorrow morning. But again, that's really, really speculative. I'm not seeing a reason for that to unfold. We are also going to get some significant economic data tomorrow in regards to unemployment claims as well as non-farm payroll. So pay attention to that early in the morning as well. But QQQ, just to keep it simple, longs over the hammer highs, top of the range, or flush under the hammer lows, and the support from the channel here at 340 for shorts, taking us closer to 329 on more aggressive sell-offs. Just to keep it simple in the QQQ, that's what we've got, right? Continuing along and finishing up our broad market with the IWM Russell 2000 and our small caps, of course, what do we have going on here? Couldn't quite make it to the neckline of the double bottom. Again, I know I sound like a broken record here, but 208, that does not change. Really lackluster, grindy move happening to the upside here. You could start to look at it as a slight channel, right? If I were to do something like this on the 30-minute, this is probably not something that I would recommend you try trading. I'm just trying to illustrate that we do technically have higher lows and higher highs. There we go, redraw as channel. I'll do something like that. Let me just activate that and adjust it backwards. There we go. So you can get the sense that we do have, again, lows, higher lows, highs, and higher highs here. We're at the trend line. Are we going to get follow through to the upside back to the midpoint of the range, if not higher to the top of the channel? That's the question to be asking right now in the IWM. Just like in our QQQ, let me remove that now that we've sort of hit that point home. We have a flush point that's forming here. So let me grab the other tool. You can clearly see a level at 270 cents. You get the sense that it was prior cents so many times. You get the sense, I'll say it one last time, there we go, you get the sense that we have this prior resistance area that's now offering support, and support into the end of today's session. And just like in everything we've discussed so far on the shorter time frames, if this produces another lower high and equal low attempt, that's where you look for the flush, and 197.15 is back in play. That would also be a breakdown of that little ascending channel that we were just looking at with the higher lows, obviously, on a violation of the hold here around $200.70. On the upside play, this is where I'm not really seeing it clearly here inside of IWM. I suppose just like in the Qs, it could be long over the hammer highs, but immediately you're going to have to contend with that high right here around 203. Stop loss goes here. I mean, that's roughly a 1-to-1. It might even be worse than a 1-to-1. Doesn't really make sense in my estimation. So maybe if this turns into a double bottom, your neckline break gets more interesting for the trade here, back up towards 205 with a stop on a failure to hold the neckline. So, right, that tighter risk reward makes more sense in my estimation. So that's something to watch out for here in IWM. If you want to play upside, we talked about downside flushing these lows here from the daily. What does that do for our pattern? Well, if we flush the lows and it's the bear trade, obviously we know that we're just stuck really in this sideways channel here and not really producing that double bottom. Over the course of time, this would strike me as price acceptance underneath that critical pivot, the 208. Let me go out to a weekly really quick just to illustrate that point. Again, if we're thinking about building blocks in our marketplace, here's building block number one. If we can't get above 208, we're building out another block essentially down here. That's steps in the opposite direction of where we want to be going, right? So to me, 208 over the course of time needs to be recaptured. Otherwise, the small caps just aren't really something that's in play, essentially. It's risk off, right? If we can't take out that 208 and we're just getting continued price acceptance underneath. So that's how I'm looking at the IWM. Hopefully today's video was insightful for you with a couple of clear setups and scenarios to be thinking about tomorrow. Again, I don't know better than anyone else tomorrow what is actually going to unfold, but if some of these scenarios start to pan out, we now have actionable setups to take against them, all right? So that's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.